Welcome back. Well, a bit of a pullback is what we're seeing from the lows, but that's getting sold into as well. So let's see whether or not we can pull back a little bit. There was an attempt that was made, but that got quickly sold into. Well, let's invite our first management on the show. Then we have Godawari Power. Well, they have approved a buyback of around 250 crore rupees. That's at a premium of close to 28% in comparison to Friday's close price. The company is also in process of expanding capacity at a capex of close to around 1,000 crores odd. To understand more details on these fronts, well, we're joined by Mr. Dinesh Gandhi, who's a director at Godawari Power. Hi, Mr. Gandhi. Good morning. Thanks so much for joining in. Well, let's get a couple of aspects out with regard to the buyback first. One, will the promoter entity participate in this buyback? And point number two, any reasoning that you'll price the buyback at such a sharp premium, 25-30% higher? Go ahead.
Thank you, Nigel. Thank you for having me on the show. Coming on to your first question about the promoters' participation in the buyback, the promoters will definitely pass. The buyback is through the tender route, and all shareholders of the company, including promoters, are eligible to participate. And promoters have given their indication that they will participate into the buyback.
Okay, and what about such a pricing?
Coming on the pricing front, see, Godawari Power has been trending in the range of, say, about 250 to about closer to 597 for last 1 year. The highest it is traded as 497. So we thought that the highest price that the stock has traded in recent past should be the basis wherein many retail shareholders would have entered the stock. So they will get an exit, and there will be a reservation for 15% of the buyback for the retail shareholders.
All right, so that is considerate of you. But what I wanted to understand from you is that with this buyback, two parts. One, with this buyback, do we rule out a dividend, if at all? And secondly, you have a capex plan of 1,000 crores. You've spoken about this in the past as well. The cash on your books, I see, is a little over 500 crores. So 250 crores goes away from in the buyback. The remaining 250 crores, your capex plan of 1,000 crores. How do you fund that? Do you plan to take on some debt?
Yes, good morning, Mangalam. See, coming on the buyback, yes, definitely the buyback will be funded through out of the existing cash balance. So far as our expansion plan is concerned, see, the expansion plan is still, by the time we go into implementation, we have to still get the environmental approval. And once the environmental approval is received, then we will be, going into the capex mode, and that will take 18 to 24 months for the setting up. And as you are aware, company is generating in excess of 1,000 crore cash every year. So we will have sufficient funds to, fund our expansion plan looking at the current market conditions.
And no dividend, right? Now that the buyback has happened.
No, dividend will definitely be there. It's not that dividend will definitely be there.
Okay, so you'll find the buyback via internal accruals. Dividend will also continue, and so you're fairly confident, and most of the capex will be funded by internal accruals as well, right?
Yes, that's right. Okay. That's right.
All right. So we've got through with the buyback news then. Now, there's also been an overburden dump, or in simple terms, there was a bit of an accident that took place at one of your mines, the Ari Dongi mines. Could you tell us what is the update out there, Mr. Gandhi? What is the status now? By when will production normalize? You have mentioned you have some inventory of iron ore, so you can use that to make pellets. For how many days do you have that inventory? When does it stabilize? Go ahead.
See, as we have made the announcement last week, there was a dump of the iron ore at our Aridogri mines, which has fallen maybe because of the blasting which takes place because we are still trying to find out the exact reason, and I've appointed a technical team in order to look into that matter, why the dump has fallen. Now, so far as current mining is concerned, we are still able to operate the mine at about 50% of the regular operations, and that should continue for couple of days. By the time we are able to assess the overall situation and decide the next course of action, so we will make a suitable announcement in due course of time.
So
once we get the report from the technical.
So Mr. Gandhi, just to clarify, for now you'll operate the mine at close to around 50%, right?
Yes, that is where it is operating currently.
You have inventory for how many days you said?
About 3 weeks.
About 3 weeks, okay. So if this doesn't get resolved, then you'll have to resort to buying iron ore from the open market?
Yes. It doesn't
That will come
resolve,
at a
and we will have clear situation emerging in next 2 to 3 weeks time. By the time we'll be able to, update the market on that.
And what is the typical price difference between buying iron ore from the open market and you producing it yourself?
It is currently about 1,500 rupees a ton.
Ooh.
All right, 1,500 rupees a ton. So that perhaps would be a hit directly taken on your EBITDA. Just wanted to understand the realizations for pellets. Third quarter was close to around 80 to 184 odd rupees. The same time last time it was close to 10,800. So it's been on a downward trend. Where do you see it in the fourth quarter and the near future?
See, current prices of iron ore pellet in domestic market is close to about 10,500. And we continue to sell the product in the domestic market because export is at a, lower than the domestic prices. So we are continuing to selling, and looking at the reopening of China, we are pretty confident that this kind of prices should help for near term.
Okay, all right. Final couple of questions then before we let you go, Mr. Gandhi. We had Abhishek Agarwal who joined in earlier, the promoter entity, and he had mentioned that margins he is expecting it to stabilize in 18 to 20%. Do you think that is doable? That's point number one. And also, Mr. Gandhi, exports, they were expected to resume from Q1 FY24. Do you think that it goes back to, say, 20, 30% of your total mix, or are you still satisfied at current reckoning to sell in the domestic market?
See, as Abhishek told you last time, the margin will continue to be in the range of 20%. In fact, in the current quarter also, the margin will be better than the last quarter, despite we shutting down our sponge iron and other value-added facility, because 100% of the pellet is getting sold and the prices are better than the last quarter. Current ex-plant realization are close to about 10,500 rupees a ton. And if you go in the export market, the prices are still lower on ex-plant basis because of the expenses involved in the freight, etc. So if I say sell in the export market, my ex-plant realization will not be more than 10,000 rupees a ton. So it is better to sell the product in domestic market as of now, till the market improves. Yeah.
And margins, you said 18 to 20% holds, right?
Yeah, margin will be close to about 18 to 20%.
All right, and this despite the current situation that you're in, where you may have to buy iron ore from the open market.
No, I'm talking about the current financial year. Next financial year, we'll have to assess the situation on the mine. I think we'll have more clarity in next 2 to 3 weeks, and after that, we'll be able to guide.
Okay, we'll have to wait by for this. I think this is going to be an interesting one with regard to that mine, because you're getting most of your iron ore from that particular mine. If it's shut for a longer duration, then it could hurt you all. For the time being, though, you're sitting on inventory for 3 weeks, so it'll hold you in good stead for now. All right,
yeah,
Mr.
No, in fact, I was saying that I think the more clarity will emerge in next 2 to 3 weeks, and we are confident that it will not go very long period of time. It might be there for a couple of months, but it won't be very, very long period of time.
We'll wait by for your communication then, Mr. Gandhi. Always good hearing your thoughts. Good to hear that pellet prices have recovered to around 10,500 rupees. You're holding on margins of around 18 to 20%. We need to see how this captive iron ore mine situation plays out. For the time being, the stock is more or less flattish, but in the last 1 week or so, post the announcement that they could consider a buyback, the stock had jumped up close to around 3.5 to 4%. Slip into a short break. On the other side, we'll continue to focus on markets and stock-specific action.